Hello and welcome to another update video about the DXY. So the DXY is currently getting rejected, or did get rejected, around the 14th of January from our resistance area here. And the question is now, has the top already formed? I am a bit skeptical if a top has really been formed. If I go to the one-day chart, we can zoom out a little bit. The current idea is still that the market should overall move lower, right? But I see this here only as a corrective rally. So it's part of a corrective rally. There was a chance for upside extensions in an impulse, which could technically still happen, but it looks more like a diagonal pattern now. But anyway, the idea is A wave down, whether the A wave bottomed in January 23 or in July 23 isn't so important. Then a B wave up and a C wave down. A, B, C is a structure I'm tracking here. And this means it should still sort of medium term take us down into the low $90 area. And it's simply a matter of, or the question is, how high is this B wave going to go? So zooming in a little bit, you can see that in both counts, both white and yellow, while the yellow count can extend a little higher, both of these wave counts consider the move up as a B wave, and we could be quite close to a top. The question so far has been whether the B wave already topped or we get some more upside extensions. Certainly, what I mentioned in the last update, that an impulse to the upside could unfolding, this seems more and more unlikely, less and less likely. So the yellow count is a diagonal pattern now. It's still possible, it's still valid. Due to the depth of the wave 4, I think it would have to be a diagonal pattern. Bear in mind, this move up is seen as a C wave, so it's a 5-wave move. And because it's a 5-wave move, it does kind of look incomplete to the upside, right? So in the yellow count, this could be a wave 1, wave 2, wave 3, wave 4, and a wave 5, and that could be it. So one more high would be ideal. The price, however, is currently testing the 61.8 retracement at $107.18. And that's the bottom of the support area for a wave 4 and a diagonal. Now, very important, this is not an invalidation point. The invalidation point for one more high in the yellow scenario is the swing low at $105.40. It's the swing low from the 9th of December, or 6th of December. But it means that should the market continue to decline next week, it looks more and more likely that a top has already been struck. To confirm this further, the next bounce needs to be corrective, form a lower high. We need a break below $107.18, a sustained break, followed by a break below the previous swing low here at around, $105.40, would be further confirmed with a break below $103.40, and then the final confirmation would come with a break below pretty much $100. So this would be final confirmation though. And yeah, I mean, all I'm saying is I like the idea of the yellow scenario because it does look a bit incomplete to the upside. On the other hand, really that move up is long enough to be all of wave C of B. Could always be like a WXY structure or something instead of an ABC, and here the C wave, which should actually ideally get one more high. But it's not absolutely needed because we've already reached standard resistance. So next week it will become important specifically to watch the Fibonacci support area with $107.19 as final support. Any break below it will already indicate that the white count has likely topped, but we would need further confirmation, like for example a break below the red line here and then the previous swing lows. But it's likely not going to drop in a straight line. There will be ups and downs. I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. Thank you very much. Bye-bye.